thought about what they call double entry. So if you say you have received a loan, okay? When you receive a loan, it's cash to you, it's an asset to you, because you can use that money to run your business, so it becomes an asset. At the same time, it's creating a liability. It's creating a liability that you have to pay back. So, when you have assets on one side, for example, a loan will appear as an asset. It can be a current asset on which of these sub-items can we put a loan? It could be cash, okay? On the asset side, you have received a loan, and it can be cash, but it creates a liability. Okay? So, under liabilities, that loan will also appear. The same amount that will appear under assets, the loan received, will also appear under liability. Now, liabilities can also be divided into current liabilities. Can somebody go into what are the major sections in the liability section? Can you go? Liabilities, what are the major components? On assets, we have fixed and current. What about the liabilities? Short-term and long-term. Yeah, sure. I thought so. There should be a way referred to as current. The reason I want you to be telling me because I'm not an accountant. But as an economist, I can interpret those things that appear. Now, this is an introduction for you to understand what the balance sheet contains, but I'm not an accountant. So let's do it together. But later on, we'll be able to explain to you what all these things mean. Okay? For the business. Now, what are the risks that are coming up? Please.
Loan sale.
Huh?
Loan sale.
Loan. Loan sale. Okay? So the loan under the asset is appearing as an asset. Okay? It's a source of funds. It's a capital, even though it's called debt capital on the asset side. Okay? And then on the liabilities, it also appears as something that becomes loan payable. What else? Sorry? Defined.
Account payable. Accrued liability. An end revenue.
What?
An end revenue.
An end revenue. What would that be?
Payment received from customers for this service that have been delivered.
That have not been delivered. So that is actually an opposite of this one. Prepaid. Okay? So somebody has paid you, but you have not delivered.
No, they have been delivered but not inked.
Sorry?
They have been delivered but not inked.
Not any.
Yeah.
Yes, you have not paid for it. That's what they mean. You have received the goods, but you have not paid. So it means you owe something. That's why it's like this. One other thing, tell me where in the balance sheet, where do we find the owners of capital? There should be an item there that talks about share or equity stock. Shareholders. There should be an item under assets. I didn't hear you talk about equity on assets and on liabilities. They must appear. They must appear as balance items. Remember, the reason it's called balance sheet is because whatever you do, the assets should be equal to liabilities. That's why it is called a balance sheet. So among some of the balancing items should be to do with ownership of capital. The middle question I do about what is the balance sheet? By item pasivo, what we call balancing item. Pasivo by ma figures or equity. Shareholders capital. Right? You want to say you want to
Total equity.
Huh?
Total equity and liability.
Total debt?
Equity and the owner's equity.
Yeah, it should show where the source of funds came. Okay?
Capital.
Yes. On the balance sheet itself, you must see that item. So it should show on both the asset side and the liability side. It should. Because remember, the company either uses shareholders' money or borrowed money. Remember what we have been discussing about equity. About capital structure. Okay? All along we have been discussing about capital structure. That a company can operate either using equity, capital, or debt capital, or both. Okay? And they can have a structure dependent on a number of variables that we discussed. Remember? Okay? How much debt you want to have, how much equity you want to have. So the total source of funds should include both of them. Equity and debt. Of course, you can have a company which is solely running on equity. find a company that is solely running on equity and no debt. That's possible. But I think it's very rare to find a company that has no equity at all and only running on debt. And it's also fun. So the balance sheet should also reflect that. And usually, it's towards the end of the balance sheet. Okay? So we'll not go into the various calibrating the various ratios here. Let's look at the other financial statement, which is income statement. Income statement is composed of 5 items. Check for me. Check for me income statement. Financial statements are usually a record and published for all investors, for all shareholders to see. So the balance sheet, the income statement are very important for the owners of capital or investors. So for example, for you to be able to generate new investors into your company, those investors look at this financial statement. Or just write what is an income statement and see whether it's possible to bring in what items are found there. It should be a list of things. So you have first revenue. Expenses. Gross profit. Okay. An income statement is actually the same as the profit and loss account. Okay? So a profit and loss, so usually you have the balance sheet and then you have income statement or profit and loss account. Now I want you to tell me what are the items there. It's not just that simple. Kama kara this can danda ndakati. It says asset. Have you opened an example of profit and loss account?
Yeah.
Maybe type in an example of profit and loss account. Type in exactly the way I'm saying. Example of a profit and loss account. Masiku anapo information is everywhere. Ungo type about it. We don't have to open a book. I want you to tell me my items they are available. I'm a candidate in it too. See my two items. Expenses and revenue. expenses side.
Operating expenses.
Sorry?
Operating expenses.
Okay. Operating expenses.
Operating income.
So you will so what charge? You said what?
Operating income.
Okay. That was revenue side.
Income before taxes.
Income before tax. Okay. Now I'm going to put my balance side, which is profit. So you have profit, as I said last time, which is profit, gross profit. So profit before, you have profit before that? Income before what?
Income before taxes.
That is what we call gross profit. What else?
Income.
And then the sheet you have opened is just one line. Okay. I get you. So in mukapita financial statements or for example the income statement or profit and loss account, for a typical company, more details than those who hang on summary committee. More detail. Kama kanzele jitu kama items. Why is the income statement important? If you as economists on corporate financing about running a business, we are not just our job is not just we don't care how they are calculating this profit. What matters for us is why is knowing the profit of any company important. When you calculate is an accountant's business, but you also remember that the profit for the accountant is different from the profit for the economist. Okay? Because the accountant only puts in the actuals. Okay? So for example, cost of goods sold. He looks at what expenses were there for them to produce those goods. And these are actual, no opportunity cost involved. So for example, the thing that we talked about, if a manager, if you are operating a company yourself, you are the manager of your own company, you may actually, the expense of your time may not be rewarded in terms of the salary of the time. Okay? So the cost of goods sold might be underestimated because your time, your salary is not being reflected there. Because if you work elsewhere, you get a salary. Or if the company is operating its own building and they are not, the accountant does not indicate the expense on rent. So the profit will be higher for the accountant and lower for the economist. But what is important is what is the use, what is the concept of profit, how does it help us? what are the functions for profit? One, so this income statement or profit and loss account, income statement, stroke profit and loss account, for us, why do we want to know the profit? What functions are there for profit? What functions? One is it indicates performance. It's a measure of performance of a business. That's one use. One important use for knowing and understanding this account. It indicates performance. That's one function. What is the second function for the profit and loss account?
Measuring profitability.
Sorry?
Measuring profitability.
Yeah, but what I'm trying to say is, why should we be worried about knowing the profitability of the company? Look, this course is about corporate financing. So we have to find the relevance of financial statements in terms of financing. Okay? So one of those uses of this income statement or profit and loss account is it measures performance. It shows that this company is performing well. Why is it important to know that? It just means that the shareholders, the owners of capital, are not losing their money. Okay? They are not losing their money. Because mind you, what we discussed previously, we said profit is equal to total revenue minus total cost. Okay? So, if you are making positive profit, it shows that you are performing well. And knowing the performance of the company that is performing well gives some confidence that the shareholders are not losing money. Because if you make profit, it means you're ukulia mbamba. If you are not making profit, it means your total costs are higher than your total revenue. Which means mukudia mpamba. So mpamba ujia wajikela kwa any other company. Ndamena always the shareholders. So if you are making a loss, it means you are eating only the share value of the company. The value of the share will no longer be the same. It will be going down. To the extent that if you continue, the company will grow, right? What other functions for profit for this income statement? What other functions does the income statement get? Apart from measuring performance.
Decreasing the cost.
Sorry?
Decreasing the cost.
Decreasing the cost. Not really. No. Because, in profit can either, it's always that revenue is higher than your cost. revenue become higher than your cost, that's not the issue. But just give that impression. What is the second reason for why income statement is important? One I've mentioned that is measured performance. Okay? The second thing is what? It is a signal, or it can be used to attract more investors. Okay? You can attract better and more favorable sources of financing. Okay? So if for example, somebody has money and wants to invest that money for example, in shares, one of the things that they will look at is they will check the financial performance of these various firms or companies at the stock market, for example. So you will go and check the profit levels of National Bank, profit levels of Airtel, Nico, and others. And that historical record of how they have been making profit will give you confidence that I can invest in this company. So it is used for attracting investors. What's the other use? The other use is ensuring survival. You can tell which companies will be there in 10 years' time and which companies are likely to close. Do you have another reason, that you can share? Tell me another one. Sorry? Decision making. What do you mean?
It helps them to get their weaknesses.
You will see later on we will be deriving some financial ratios and indicators from this financial statement. But just the profit, this profit alone, profit and loss account. Why or what use can you? We have talked about three so far. One is performance, measuring performance. So you can compare the performance of one company to the other. Second is you can use it for selling the company to attract more investment. Third is for you to know which companies will survive, which companies have got a better future. Okay?
That's about to keep financial levels. What's financial levels?
Sorry?
To store past financial levels.
Sorry?
So,
will win.
okay, I said it helps to keep financial levels.
Financial levels? No. Performance is clear. Because for example, the factor number one, which I said, measuring performance. Okay? Because it shows that this company is properly run, is being run properly, or it has got good management. Okay? It's an indicator that the business is being run successfully. So it's a perfect measure of business efficiency. Remember, profit is total revenue minus total cost. So efficiency means maybe your total costs are as low as possible. That's why you're making profit. Okay? So number two, we said it is to attract investors. Okay? Now, profit means because people are now can see that this company is being run properly, performance-wise, so people will be attracted to participate in the success of this company. For example, no player wants to go to join a team that is always losing. Do you think even supporter, team your supporter, do you choose team you so companies are also like that. So the income statement is very basically telling us whether a company is being run properly. It's a record. As the statement says, financial income statement is a record. Okay? It's a record. So we cannot say because it's a record, then it's a record. It's a record. Okay? Now, why are we saying the second reason is to attract investors? Why is it important to attract investment in investors? Because if you need more capital, and you, for example, you want to go and issue a bond, people will come and buy the bond. Because they know you make profit and you'll be able to pay back. If you wanted to go to the bank to get more money, your profit, your income statement will be looked at and the bank will be convinced that you or other America 1 billion happens of beta. Because you are making profit. The other reason is stability and survival. Remember I said that you can tell from this income statement whether a company will stay only for the next 5 years or will die. So, as a claimant, you should be asking me, what do you mean? How can an income statement, how can you know from the income statement that a company will survive for the next few years? It's because, remember the source of funds, finance, corporate finance. What did I say about equity, for example? Equity capital. Equity capital comes into several pieces. I said common stock, preferred stock or shares. Now, when you say retained earnings, what do you mean? What about profit? Explain properly. What do you mean by profit? Retained earnings means that when you have made made your gross profit, then the taxman comes, takes some of it, then you have profit after tax, your net profit. That net profit, you decide whether to give all of it to the owners of the company or keep some. So after you have, let's say, Mapanga profit 100 million, and you take 50 million as dividend, shareholders, Masunga 50 for expanding. So that 50, when you have kept it, it's called retained earnings. Now, can you imagine a company that is making loss? We really have retained earnings. It won't. Retained only earnings are profits which have not yet been distributed to the owners. That's what we call retained earnings. Masunga for expanding the business. So you can tell which business will be there tomorrow by seeing whether they have any retained any profit. So this income statement is important for you to see whether the company has more than high. So those three are the major benefits or the major usage of an income statement or profit and loss account. Can somebody Google on types of financial statements? Now we can look at the smaller bit. The major ones are these two: balance sheet and income statement, which is the profit and loss. What's the other one? Examples of financial statement.
Double entry.
Double entry is very much bigger for balance sheet.
Wow.
Because you have whenever you have an asset, you have a liability. So for example, asset yote manga nyumba isi mulini building. Final capital funds for building that asset. So it's assets and liabilities. That's why I have double entry. Double entry is the matter of what is my China taxable. She's very small, that's all the other side. So assets bear responsibility. Or that liabilities, and liabilities can also create assets. That's why it's double-edged. My financial statement apart from balance sheet and income statement. Isn't that? What else? Huh? Yeah, cash flow. Yeah. You might want to see what is contained in cash flow? It's a very minor financial statement, cash flow. What items come in there?
It shows the inputs and outputs of cash and cash returns.
Yeah. So some people like to have an account of that, but it's important to know. So anyway, we have balance sheet, we have income statement, has uses too. The cash flow has some uses, just like the income statement. Okay? Both of them have got some uses, but we will not spend a lot of time analyzing the cash flow, what is in the cash flow. But we will spend more time analyzing what is in the balance sheet and income statement. So from next week we will be doing calculating ratios, liquidity ratios, cash flow ratios, and all that. There are several statistics that will be calculated from this financial statement that we have just introduced. So if your phones are not have good calculators, bring some calculators with you. So we can do some ratios, and I hope I flash me. Nada para los músicos una burbuja. Mas se gosta de uma de, aí vai já fazer a base, Nunca mais creme. Basi mimi kwa ndoto ya umma, basi it's too much. Okay.
So next week.
I'm telling you. I completely. Even do that in the fresh moment that you are. Fresh money knowledge is not in my financial issue.
The boy is about getting office one.
Mao watu bila kujibwira. Hapo mama wanjibwira za panga wote. That is face. I imagine that they need to depend. Kuma. Not the kuji. Kuma test. They are going to manage test. Test makamuni. The whole of test they seem to do that. Oh, they're lucky. No day. Friday. Friday makamuni. Ndiye mkana kanga pete ulimkuzira all day. Friday is happy. Ndio mwanzo tulicho sio kwa school. Ile kazi ina. Bila